Well, let's, on that note, move ahead and get our first corporate conversation going. The stock and company in focus is Ashok Leyland. The second quarter came in slightly above street estimates, actually, as estimates themselves have been running very low because the CV cycle has been in a bit of a logjam. The company managed to post margins, above estimates. There was expansion both sequentially as well as year on year. Ashok Leyland also reported the 7th consecutive quarter of double-digit EBITDA. We have with us now Shenu Agarwal, MD and CEO of Ashok Leyland, to talk about the performance and the outlook. Mr. Agarwal, thank you very much for joining in. So you've managed to meet estimates with the reported numbers, despite, of course, these are weak numbers if we compare it to the previous years. What is the overall outlook and what are the trends that you can highlight for the second quarter? What worked for you in terms of especially the EBITDA performance?
Yeah, listen, we are very happy with our margin story. This is the 7th consecutive quarter for Ashok Leyland to post double-digit EBITDA margin. I think our trajectory is not yet done. A year and a half ago, when we went to the investors and analysts, we had promised that we will gun for a mid-teen EBITDA over a medium term. But we are very happy that quarter on quarter, we are posting a healthy increase in our EBITDA. Now, as far as Q2 is concerned, specifically, our EBITDA has been 11.6. And as compared to, Q2 of last year, which was at 11.2. So we have made considerable progress. Now, one thing that I think everybody would understand is that this has come actually at a lower revenue than last year. And the revenue was lower because of some setback in the CV industry that we have seen in Q2. But still, like I said, despite all these factors, we are very happy with our margin story.
So this medium-term guidance of mid-teens kind of margins that you've been talking about, while we have seen an improvement, the current margins are still below that level. When do you think you will be able to achieve that guidance of yours or that goalpost of mid-teens margins?
What we said was that we want to achieve a mid-teen EBITDA numbers in the medium run, right, which could be like 2 to 3 years from now. But already, in quarter 2, we have hit about 11.6. I think we need to continue just our journey. I'm not sure about the timeline, although I have already said 2 to 3 years. But I think the more important thing is we need to just focus on our journey. The EBITDA margin improvement, there are a lot of opportunities within Ashok Leyland. I think the number one opportunity is to look at how we can build premium into our products, how we can extract better value from the customer for our products, by giving to customers what they value. So that is definitely one. Other big lever is how we can compress our cost, internal cost, whether it is the product cost or any other overhead cost. So that also, I think the trajectory has been very good in last 2.5 years. We think there is still a huge amount of juice left there. So that is another focus area going forward. And I think the third one I would say is that we have, other than MHCV, we have some very good margin, high margin businesses like defense and aftermarket parts, and also power solution business. And even in international operations, our margins are very handsome.
Okay, Mr. Agarwal, let's focus on the main segment, MHCV. What is the growth range you're working with? After the first half of the year, I've seen almost no growth for the industry. Now there's an expectation of improvement in government. CapEx, even Monsoon was fairly good. So what's your range?
Yeah, let me start from the beginning of the year as well, as far as MHCV industry is concerned. I think when the year started, most of us, and including some very prominent research agencies, were forecasting about 15% drop, in the first half of the industry. Now, against that 15%, we have dropped only by 2%. Yeah, so, and 2% drop is almost like flattish. So therefore, I think this whole narrative that is building, we have to be very watchful about this narrative that the industry is going southwards. Industry is actually almost flat for first half of the year. Now, breaking this into 2 quarters, Q1, the MHCV industry grew by about 10%, while Q2, the industry degrew by about 12%. Now, the reasons for degrowth of industry in Q2, as far as we believe, are very temporary in nature. We started with a lot of extreme heat waves. Then there were uneven monsoon. There were also some extended monsoon, which actually in many parts of the country, which created a solution like a flood-like situation, where the fleet utilization went way down. Now, all this actually postponed, all that buying that was supposed to happen in Q2. Also, there was a slow pickup in government capex after the elections, which generally is the case, but I think this time it was a little bit more slower. Now, all these factors are temporary because we know that fundamentally, if we look on the ground pulse, we see a lot of positives. In October itself, we have seen fleet utilization, which fell as low as 60 to 65% in July and August. It is back to about 90 to 95% in October already. We see freight demand coming up. We see freight rates coming up, right? So overall, I think in the back of a good monsoons, in the back of government capex now coming in full stream, and a lot of activity that we are seeing in construction infrastructure space, I think H2 should be a good time for the CV industry.
Okay, that's good to hear, sir, because it's been a while, several quarters of absolute sluggishness, right? So you're saying second half is going to be better. Can you give us some sort of a range? I mean, maybe for the medium and heavy commercial vehicle segment, for yourself or for the industry at large, what's the growth for the full year, given that you're expecting a strong second half?
So see, I mean, if you refer to some of the very recent reports by market research agencies, they have forecasted that MHCV industry could be, for the whole year, could be between 0 to 3%. Now, for that to happen, for 0 to 3% to happen for the overall year, H2 has to grow somewhere between, let us say, 6 to 10%. Yeah, so those are the numbers that have been predicted by some of the market research agencies. Our estimate is not very far away from that.
Okay, so 6 to 8% could be the MHCV industry growth in the second half. So now let's talk about your EV arm, Switch Mobility. Can we expect this segment to achieve break-even this fiscal? And how is your order book looking like?
Yeah, we are very happy with the progress that both Switch and OHM has made. You know, Switch is a company that focuses on building products for the electric bus and the electric LCV segment. And OHM is our EMAS subsidiary. As far as Switch is concerned, our focus in the last couple of years has been in developing new products. We are very happy that we are almost going to be completing development of a completely new 12-meter low-floor bus that we are going to supply to Delhi and Bangalore. Our order book is at its all-time high. We have close to 2,000 bus orders now in our fold. We are producing all these buses as we speak. We are ramping up production as much as we can, and we hope to deliver all these orders in the next 12 to 15 months. So Switch, as far as Switch is concerned, we think not only it will be a big jump in their top line in the next 12 to 15 months, but also we expect Switch to break even on an EBITDA level very, very soon. It might happen either in Q4 of this year or at best Q1 or Q2 of next year.
Thank you very much, sir, for joining in. That's the word coming in from Ashok Leyland.